So I think the question was for a billion-dollar brand, right? And if I look at it, can't be better. Some people said that this is India's decade. Some people said that this India's century rather. And some people said that this decade is for D2C brands. Okay. If I look at billion-dollar ideas, you'd see that we probably have around 100 plus unicorns with, I think, $340 billion odd of valuation already. So I think lots of billion-dollar ideas. If I look at what does D2C look like, I think it is approximately, if I see 2022, it is about 12 billion, expected to grow 5 times to about 60 billion by 2027. So, staggering growth numbers for India, even on the D2C front. Interestingly enough, why is this really happening? It's a brilliant confluence. If I see people, I think probably 50% of our population has internet access, smartphone access. I was just looking at some of the stats that have just come out from the Big Billion sale. And if you see about 1 billion people shopped on the platform in just 8 days, there were 4 million, first-time new buyers. 60% of what was sold was in tier 2, tier 3 cities. So I think, heavy green lights all the way and, growth, which is literally unbound as possibilities, right? So I think that if you look at why D2C has become so exciting and so interesting, I think the ability to build a brand with lesser capital couldn't have been more interesting than it is today, right? If you see about brands reaching about 100 crore mark, it just takes them about 3 years to about 7 years timeline, which is actually incredible. And therefore, it's very interesting that I have, while both of them have been founders as well as investors, but I'd ask, Arjun to play the investor role and Naiyya to play, the founder role over here. But please feel free to comment from both sides. So given that this is such an interesting place to be at, right? Arjun, let me start with you as an investor, right? What are the key trends and insights for creating a successful D2C brand, right? And you can give us your perspective as an investor coming from both sides, from the company as well as from the consumer sides.
Yeah, I think that's a loaded question to start, and I can talk about it for the entire 30 minutes that we have for this session. But look, I'll step back and talk about why there is a reason or a right for these brands to exist, right? So I grew up in an India which was obsessed with imported products. I remember for my 11th birthday, I was gifted a Japanese electronic sharpener from a store that only sold imported products, because at that time what was considered imported was good and what was considered Indian was substandard. I went to the US for my undergrad. When I came back in 2013, when I did my first job, India was changing, right? 2014, government change, Ministry of Ayush was created. I was working at a consumer sector focused private equity fund. And at my time there, I saw consumers being happy to consume quintessentially Indian brands. I am very patriotic. I wear this band with the Indian flag on my hand. Have been wearing it for the last 10 years. And so I saw that change and that evolution happen. But there weren't enough brands, right? There weren't enough new brands. There weren't enough insurgent brands. And the reason behind that, honestly, was that if you think about my journey building a brand in the Ayurvedic product space, the biggest success that we had with Dr. Vaidya's, if you ask me, was not sales, product launches, funding, awards, and exit. It was that in a 4.5-year period, we reached 16,500 pin codes in India. 16,500 pin codes is 60% of India from one warehouse in Bombay. That time we didn't have this multiple cities warehouse, etc. Right? So I think if you step back and understand what the power of D2C is, it's two things for me. The secret sauce of what D2C brands give you, right? The first one is it gives you the ability to launch a brand and take it pan-India in a very short period of time. That gives you another thing, which is that you can also launch brands in niches, because if there are only 10,000 customers in Bombay and 5,000 in Delhi and 7,000 in Bangalore to launch offline distribution may not be actually cost effective, right? So I think from a cost perspective, you can reach a larger share of customers or larger range of customers faster. And the second thing, which is really, really exciting, is names, phone numbers, email addresses, and products the customer has bought, first party data, right? Because the chain between a manufacturer getting the data of a consumer that's bought the product from an offline retail store has 3 or 4 layers in between. It has a super stockist, as a distributor, maybe a wholesaler, and then a retailer. And so the flow of data is really long, which D2C sort of gives you, right? So if I ever launched a new product, I could send it to a base of 2 million customers already and get them to engage, right? Not saying that D2C doesn't have its own share of challenges as well, but I think this opportunity allowed hundreds of brands to be created across spaces over the last 5 to 6 years, right? I would say the wave of D2C started in 2016, 17 when the first few brands were created. And I can tell you that when we started, a lot of people actually said, why are you going to Ayurveda? It's such a cluttered market with so many sort of age-old players. But this opportunity has allowed brands to break out. And the proudest moment for me today is going to a chemist shop or a modern trade store and seeing a brand that started online now occupying a share of that store. And that's the future of what we'll talk about in omnichannel. But yeah, I think that's the reason that so many of these brands exist. That's the reason that, by the way, we are on this forum having this discussion about D2C. I would say 5, 6 years ago, there would be no discussion about this.
From a consumer point, are you thinking that consumers are happy to consume or are curious about different brands? Where do you see the change? Because you mentioned last 5 to 6 years, you've seen that shift. So what is this attraction for? Because, you know, we moved from foreign to branded. And from branded, literally this has become like a new brand. Because, you know, when you're reaching out, it is not a brand yet. So what's your thoughts on that from a consumer lens?
Yeah, look, I think India is fundamentally still a brand-starved nation. Even if people talk about competition and clutter in the online ecosystem with D2C brands as well, I think that we have so many people with so many different preferences that we still have lots of scope for creating brands. And this set of consumers weren't exposed to so many brands for a very long period of time. And then they got all of these brands. And by the way, they got them at the touch of their fingertips, right? So my parents, until 2019, 2020, did not consume online, even though they were parents of e-commerce entrepreneurs. Now my dad goes on his Instagram feed, clicks on a quinoa pasta that he likes, goes to the brand website, makes the purchase, and then in 3 days, if he doesn't get the product, he goes to the customer service, calls them and says, you're in Bombay, I'm in Bombay, why is it taking 3 days, right? So this change is significant because a large share of customers who we never thought would shop online are also shopping online, and they are happy to consume new brands. But this customer is much more demanding than the previous customer. And so they expect high levels of service and high levels of quality. And if you don't deliver that, then it's not going to be good for you.
Good, thanks. Naiyya, let me come to you, right? I think, you know, first of all, you know, content to commerce, you know, if you can just elaborate on the concept for our audience, because, you know, you have got 3 components going on there. You have brands, you have the digital media piece, and you have the influencer piece. If you can just talk about that to say, and of course you come from a unicorn, right? So it's like a big one there. So essentially, these 3 components to reach out to the consumers, to create that brand are critical. But if you can just elaborate that concept and your USP, that'll be great.
So I think, so first of all, hi everyone. I think it's exciting to be discussing this. And I think I'm going to build up what Arjun actually beautifully left out at, very interestingly enough. You know, so if you look at what happened in 2016, 2017, the inflection point, I would say, for all of us in changing our aspirations, our considerations, was actually in very, very significant a way, geo. Right? We all had, for the first time in history, access to data at an unprecedented scale. Also, remember the cost of smartphones dipping massively with a bunch of sort of Indian players as well as, at that point in time, Chinese players coming to the market, right? So suddenly you had this data and device democracy, as I like to call it, that had suddenly happened in India. And with that, you know, I think what happened, Pallab, was that the customer or the person who was online, that entire demographic shift happened, right? So you had in India that was very, very largely male-dominated online. Today as well, it's still about 60-40 male to female, but that narrative is changing, number one. Number two, because of the data and device democracy, you suddenly saw social media, online conversations, online communities take on a life of their own. Right? So India, I mean, look at the percolation of, his father is on Instagram, right? Who would have thought? We are all on WhatsApp. Who would have thought a couple of years back when I moved back to India in 2014, 2015, right? I mean, Instagram was a very US phenomenon. Facebook was still sort of building its base in India at that point in time, right? So YouTube is massive in India. So I think so two things happen. One is people actually, the demographic of people online shifted. Number two, the narrative and the conversations and the aspirations, therefore, of the people who were online also shifted because of this percolation of international conversations now coming to the mainstream, as well as domestic creators finding their own voice and talking about really interesting trends and brands and, consumption patterns that they were, basically adopting for themselves. So I think these two things have really created the entire shift in just conversations and narratives. And now what does that mean for a group like ours, right? There's top of the funnel. And I think, for us, we're in a very lucky place. We have some of the top media assets in the country. We have Pop Exo, Scoop Poop, Baby Chakra, Miss Malini. Every year, we're reaching about 250 to 300 million audiences across the country, right? So we're in a place to actually talk to them and learn from them and converse with them. We have the largest creator ecosystem, 1.5 million creators, influencers with a good creator core. And we're also now building out communities at scale across the group, right? So overall, if you look at it, top of the funnel is very well taken care of with our media creator as well as community assets. But then if you go down, we have our own proprietary tech stack. So, unlike most D2C platforms, we don't operate on Shopify. We actually have our own proprietary tech stack built in-house by our product and tech team. We are one of the only groups, I would say, in India to have invested so heavily in tech and product and data science. And that leads to very high rates of conversions. Right, so the entire conversion journey from top of the funnel, people discovering us, coming to our e-commerce platforms, to our brands, to actually converting is the other piece. And of course, replenishment, cross-sell, upsell, etc. The entire loop there, right? And I think the third thing is also the co-creation. Today, again, I think something that's really special about the group is we are, co-creating our products across beauty, intimate hygiene, mom and baby as categories, onto organic personal care products. And we're doing this with a base of more than 700,000 people a month. We're getting their feedback on what kind of colors, shades, for instance, beauty appeals to them, what kind of textures appeals to them, onto, what kind of ingredients would really work for them as they think about making purchase considerations, right? So we're able to leapfrog because of this co-creation process that we, foster through our own D2C platform, much ahead of competition, because we're ahead of the trends. We catch a trend in the rise versus, looking at keyword mapping when the trend is already set. So I think these three things are the biggest moats for us as a group, and that's something we continue to over-index and invest on.
So beauty and personal care, right? Obviously, a category which is dominant with multiple players, right? How do you create a differentiator in that kind of cluttered space? And is it very critical? Because, someone could look at digital marketing or influencers, not within their company, but they can have those assets leveraged from somewhere else. So to fight that kind of, or to be competitive in that clutter, do you think these are very important assets as a must-have? And, is the differentiator that, or there is something else which allows you to differentiate within the beauty personal care space?
So two things, right, Pallab? One is that most D2C brands are not pure play D2C. In the US, D2C is used in a very puristic fashion, right? If you sell on your own platform, you're D2C. I think most D2C brands in India, and that's a great answer as well, start off from marketplaces, right? Now, in marketplaces, you get a certain amount of finite data. But I think going back to what Arjun referred to as well, having primary data, having a primary sense of who your customer is, what are they looking at, what are they buying along with what they've already bought, when do they come back to buy, right? The co-creation process I talked about, more than 700,000 people co-creating products with us on a monthly basis is insane. It's unprecedented. It does not exist globally, right? So I think just having access through our own proprietary D2C stack and pure play D2C stack on having this first-party data, knowing our customers' choices intimately, and being able to co-create with them, I think is one of the biggest moats. I would re-emphasize that again. The second is, if you look at now, why do people not build out D2C from get-go, right? It's expensive. If you look at ad costs, right, on Facebook, on Google, on YouTube, the rising cost is very competitive in environment out there with the bids. What content has allowed us to do, content, communities, conversations with influencers, etc., we have reduced our CAC of a new customer acquisition, that is, down to $0.50, which is ridiculously low, as anyone in the D2C space would be able to imagine, right? So I think that's the other big moat we built out, which is a very, very large top funnel of content and conversations and communities that help us acquire new customers at scale at an unprecedentedly low cost. And I think is the other a big piece of this puzzle.
Absolutely. I think that CAC value is like phenomenal for most people here. But what I'd want to ask is, does that change with this new range of privacy options on iOS and other devices? Does this change the game in terms of digital marketing or top of the funnel that you're talking about?
No, so I mean, of course, we are GDPR compliant. Like, we're extremely anal about all privacy. Like, I think that is front and center for any platform, be it content, be it the work we do with creators, be it the work we do even on e-commerce, right? And I think all of us as responsible platforms are. Of course, it will change the game a little bit, right? But I think it will work in our benefit. Why? Because when our potential customers actually sign up to co-create with us, as one example, right? They are voluntarily giving us whatever information and insights they need because they believe that we will help create a better product for them. So, when a customer is giving you that data in full volition with the anticipation of a better outcome and a better impact by way of the product offering, I think that is the game changer, right? When we form communities, so we're forming communities around our brands today, right? So, for instance, Baby Chakra, of course, which I was the founder of originally, has the largest community of mums and, kids and doctors in India, right? Why do they come to our platform? They come because they know they will get a better answer to the queries. Right? So we don't have to go down the same cookies route, etc., that maybe a lot of other platforms have had to resort to. We really believe in investing through communities and through content, a very strong pull factor. And I think, Pallab, that again is a big differentiator. And to keep that pull factor going, of course, you have to keep our users, we have to keep our families, and have to keep all our customers front and center in whatever we do, and be extremely stringent on data privacy, on data security, etc. I think that's a given.
Arjun, let me come back to you, because Naiyya mentioned that today most D2C brands start out as marketplaces. I'm assuming that the dominance of marketplace, even for mature players, is almost upwards of 60%. And then you'd see a trickle down into offline, which you mentioned, right? Great to see, walk and see that brand in offline, maybe about 10-15%, right? So one is, as an investor, how do you look at that? Because each channel has an incremental cost or some different costs. I wouldn't say incremental, but I'd say different cost structures. How do you see the shift, and how do you look at D2C brands that they are effectively able to manage this from a supply chain perspective, this shift across channels?
Yeah, it's a good question which I don't have a direct answer for, unfortunately, and I don't have a direct answer not because I'm an investor, just because I don't have a direct answer. So our Dr. Vaidya's experience was actually quite different. We built a brand which was 65% on own website. It started at 90% and then went down to 65%. And the reason we did that is because with Ayurveda, we wanted to control the repeat cycle of customers. Customers came for 3 to 6 months, and so if they bought for 1 month and they didn't buy again, then they would not get the efficacy from the products, right? If you asked me last year, I would have put my neck out and said, build as much as you can on your own website because you own the customer journey, you own the data, etc., all of that. The reality that we are facing today is that customer acquisition cost is rising. And it's rising to a place where sometimes it may not be as business friendly. My advice to D2C founders and the ones I interact with, the ones I help, the ones I educate, is that you have all of these channels available to you, and especially in digital, you have channels with real-time data availability. What do I mean by real-time data? I mean that you actually see on a daily basis what's selling, how fast it's selling, and at what cost. So this data will actually signal to you which channel is working and where you need to over-index and under-index, right? So what I used to tell founders last year was build your website, it's a long-term investment, go for it. Today I say, with this data, sell where your customer wants to purchase. And there may be certain products, if we think about our own behavior, that you are more comfortable purchasing on an Amazon or a Flipkart or a Naiyya or a 1MG. And there are certain products which you're actually comfortable purchasing on the brand's website. And that behavior is that behavior for a particular reason. And it's important for a brand owner to know this and then sort of segment marketing spends basis keeping this in mind. I think from a supply chain perspective, honestly, I don't know how much this would have effect, because the marketplace commission becomes the customer acquisition cost for your own website in any case. So eventually, honestly, the economics work out reasonably similar. I mean, if your customer acquisition cost is really, really high, then the unit economics won't work out. So from a supply chain perspective, I don't know how much it would change the way you do your sort of sourcing or procurement. But definitely from an inventory planning perspective, you have to be more planned on marketplaces if you're using the inventory model on marketplaces, because you will be stocking inventory in their warehouses for a longer period of time than the real time that you have in your own warehouse. So that's one thing to keep in mind. But from a channel strategy perspective, there is no cookie cutter approach that a D2C brand or a new age brand or insurgent brand should be 10% here, 60% there, 40% there. I think it's brand to brand, and your data will tell you where to go.
Okay, great. Also, I think an associated question, right? Because, D2C brands in US, Europe have been there a little earlier than they have been in India, right? And eventually what we've seen is some of them have struggled to kind of turn profits, have been in difficult situations. In India, you're seeing an interesting turn where, traditional brands are actually, brands are acquiring new age brands. We saw something out from the Aditya Birla Group yesterday. And you do see that happening. And if you see, what the Good Glamm Group has to offer as well, they have also grown through acquisition. So how do you see this kind of playing out, if you will? I mean, not everybody is going to the IPO route, but if you're looking at this journey of valuation, do you think that it is sustainable? It's, because people are clearly saying this decade is for D2C. What's your view on that?
Yeah, lots of questions in that one question. I'll try to answer as many of them as I can. I think the first part about why these acquisitions are happening, right? And I think we were one of the early few acquisitions that happened from a strategic perspective for a D2C brand. I think it makes sense, right? Because there is a new age or a nimble or an agile way that us as founders are working. Not that it's better or that it's worse. It's just different. It attracts a different customer TG. And so it makes sense to bring this into your stable, bring this brand as well as this customer set and this thought process, right? And I can tell you, you will see more and more of this with time. I think for strategics, larger consumer companies and FMCG companies, maybe it took them a little bit of time to actually understand what this whole world is. And this world, by the way, of acquisitions of scaled up D2C brands, of outcomes, of exits, etc., is 18 months old at max, right? So everyone's learning as we go along. And I think everybody's interested now. Both of us were discussing as well. I would have had conversations with maybe 5 or 6 of these large groups already who said, hey, we don't need anything from you now that you've sold your business, but just tell us how to think through these brands, these processes, integrating these founders, etc., right? So that's from the acquisitions and the strategic investment perspective. If I talk about global markets now, I think the only thing that I take from the US market and the only thing I've taken from the US market is the word D2C. It didn't exist in India pre-2016. Now we talk about it every day. Other than that, I think I was chatting with a big podcaster in the US this morning who runs one of the largest consumer brand and VC podcasts. And I actually told him that a high AOV in India is 1,500 rupees. That's $20 US. A low AOV in the US is $80, or a mid-level AOV is $80, right? So I think we can pick up trends, maybe pick up spaces, maybe get learnings. But our market is just so significantly different that I think we have to build for an Indian context. And so while we can take macro learnings, maybe some ideas, I think brands building for an Indian context and Indian consumer is significantly different. From a valuation perspective, that's what I'll end with. I think that D2C brands, most of them look like consumer brands. The P&L looks like a consumer brand. And so we had a little bit of an aberration last year in terms of valuation, with things trending up. But I think that they're moving more to the real world. And I think it's not such a bad thing actually, if you think about it, because we are FMCG or consumer products companies with revenue, gross margin, contribution margin, and eventually EBITDA. That's how our businesses look like. We are not consumer technology businesses as much as we tell ourselves that. And so I think valuations are actually in a good place right now. And I will say that there's lots of talk about the funding winter, but I think we are fortunate that we have a large domestic consumption economy, and so we'll have some amount of insulation from what's happening in the world, and good businesses will continue to get funded.
No, wonderful. Yes, I completely agree. Almost 60% of our GDP is our own consumption, so that helps. So Naiyya, a question back to you in terms of, you've acquired some D2C brands, okay? So how and when does a D2C brand decide to sell their venture, right? And how do you resolve the founder's dilemma?
I feel like I'm back in business school. No, so I mean, I was one of the founders, right? So last year we went and we acquired about 12 amazing brands and their founders. It's a privilege to be partnering with them on this journey, right, at the Glamm Group. And of course, it was a bunch of both D2C brands as well as media brands as well as creator brands, right? And let me tell you a little bit about my decision. So when I met that, and I think this has been captured in a Harvard Business School case study, interestingly enough, the story of Baby Chakra and our decision to merge with Glamm. But I think apart from, all the numbers and I think all this, how things can work out in time, the synergies, there's also a very strong personal aspect, which I think people tend to underestimate, right? So I'll talk about two things here. One is there a meeting of minds, right? So for instance, when I met Darpan, right, there was this big vision that we both shared, which was how do you build out the digital FMCG conglomerate from India, but for the world. That was the vision we shared. And that's a vision that, to his credit, he has more than delivered on at his end, right? And that's something we continue to build with him. So I think there's a big meeting of minds when you meet a founder and you decide to partner with him or her. And I think that's the same vision we shared with the brands that we acquired. We've been fortunate to acquire amazing brands like the Mom's Co, Sirona Hygiene, Organic Harvest, Saint Botanica. So I think when you think about these brands and the founders who've joined us on this journey, and of course along with the media asset, right, Miss Malini, Scoop Poop, I think what we found is a meeting of minds, the vision being aligned. Do we believe, number one, that we can be the dominant player, like, how Shiseido or like an Estee Lauder or Unilever? Can we be that dominant play from India? And if the answer is yes, that's the first meeting point. Number two, do we really believe in the hypotheses of content to commerce? If yes, then let's partner together. The second is a lot more practical. The brands that we acquired were brands that had built beautifully on marketplaces, right? And that's a great place to start, and a lot of respect for that journey. What they were looking for, almost like a plug and play in, was on building on their own D2C stack, right? And number two, how to really scale offline. So I think these two pieces was where, with the Glamm sort of history and also with the, the work we've done with Popexo and Baby Chakra, etc., we were able to kind of almost plug and play for these brands. And over the last 6 months, we've been able to actually grow their entire revenues, right, out by like 250 to about 300%, which is not insignificant given they were already operating at a substantial scale. So I think that's the other piece, a more practical consideration that if we partner together, are there very significant synergies in terms of how this will look for the business going ahead. And, just to very happy to share that last quarter, we also, started expanding internationally. So we've opened up in the GCC, and we've been able to take our amazing brands to the GCC as well. And there are a lot, I think next year is all about the international foray. And, this is the house of brands. This is the set of brands that will be basically making their foray together internationally. I think the first step in our vision to being the dominant player out of India globally.
Fantastic. So I think three main key takeaways for me. Obviously one is there is staggering opportunity in terms of consumptions and consumers out there. Second part is I love that digital FMCG brand, right? Creating maybe a global digital FMCG brand. And the third one is of course keeping it more real and saying that it at the end of the day is consumer P&L. Okay, so I think those were three main takeaways, and of course, it still remains probably a decade for D2C brands. Wish you all both the best of luck, but I'm happy we have a couple of minutes. If there are any questions from the audience for our esteemed panelists, happy to take that as well.
Hi guys, I represent a brand called Veg Non Veg. It's a premium sneaker store. My question to you, one of the things that came out was brands should be looking at building content. But at the same time, a startup, the content is not a scalable thing. Like, for a startup, it's very difficult to build a content. Sometimes it's the founder only who's, building the business as well as trying to make his own personal brand. So how do you solve that?
So before the Glamm group, I was also the founder of Baby Chakra, right? And we raised 4 rounds of funding, but we were maybe very early to mid-stage in terms of our journey, right? But we were able to build one of the largest platforms for parents in India. And it's a very niche market, a relatively niche market. It's a large market, but relatively niche in terms of it's not everyone's a parent between pregnancy and 0 to 5 at any point in time. I think we underestimate the power of conversations. And I think conversations are a very, very potent form of content. So, if we sort of reimagine this a little bit together, right? One part of content is your regular sort of, writing SEO optimized articles and doing a lot of social and Instagram, etc. But the second is how are you able to plug and play conversations amongst maybe starting point is the people who are most passionate, your brand evangelists. When you identify them, can they become people who start creating those conversations and those narratives for you as veg, non-veg in their communities? I think that, if you have, let's say, 5,000 power users, 5,000 loyalists, right? 5,000 of, let's say, 4 conversations a month, right? You're up to 20,000 conversations about your brand. That's amazing, genuine, authentic content created. And I think the second piece, and I think a lot of us share the same sentiment, the founder has to be the biggest champion. You have to take out time as a founder, or as a founding team, to talk about your brand wherever possible. Recently I just did this video where, we talk about Baby Chakra's products and I say, Label Padho Moms is the title of the video, right? Where it's me and my daughter in my house, in my living room. That video cost all of 6,000 rupees, right? And it's taken on a life of its own. So I think, we have to be creative about it. And it's not, capital is never the missing piece. It's about creativity. And I'm sure your team has it in spades and happy to chat more.
Sure, thanks.
Yeah, I would 100% agree. I think we imagine content to be TV type, YouTube style, high production value videos. I'm not going to give you an example from my journey building Dr. Vaidya. I'm going to give you an example of what I made my dad do. My family business in the luxury jewelry space. It's a store which has been existent for a long time. They have 2 stores. It's a 35-year-old business. And after I sold my business, I used to sit in my dad's office because I didn't have an office. And I saw all the customers were around his age. And while the business is doing well, I said, 10 years later, your customers may not want to purchase, right? So I just told my dad, hey, you have lots of educational content on jewelry. Can you do some reels? And he was like, what do you mean? What is this? You're making me do this. You're making me do that. And then he put his first reel out and got 50,000 views. Fast forward to today, my dad's reels on education for jewelry, how to clean your jewelry, how to maintain your jewelry, what you should keep in mind while buying jewelry has 5 million views. And Facebook's doing a case study on my dad, right? It's produced in the office. He's 57 years old. And now he's proud when his friends say, hey, I liked your reel, right? So, scalable.
Understood. Thanks.